Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, what does a bank run look like? Today we're going to take a look. Stay tuned for Prudent Money. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know, I do appreciate it, and I do have a line open if you'd like to call in, join the program with a question, whatever's on your mind today, 1-877-913-5357, 1-877-913-5357. You can also go to the website, prudentmoney.com, and send a question into the Ask Bob section, and we'll get that taken care of for you. That's off the website, www.prudentmoney.com. 1-877-913-5357. Well, as usual, there's a lot to cover today. Let's start off with this morning. The market started very strong. Things look like we were going to have a really big day in the market. At one point, the S&P 500 was almost near 2% up for the day. Looked like everybody was happy. Everybody wanted to buy stock. In the reality, nothing has really changed. First Republic Bank is still a problem. The Federal Reserve Board, I think yesterday, the more that I looked into this and read and thought about it, they are making a choice with some of the things they talked about yesterday. And it looks like they're choosing, do we deal with inflation or do we deal with a banking crisis? Now, we knew there would probably be a recession with interest rate hikes and fighting inflation. But I don't think that they really expected what would be driving a recession, which could be a banking crisis. And that's the one thing that they may have to turn their back on inflation and let inflation do whatever it's going to do, just so that they can contain any potential banking crisis. The Fed just can't be aggressive here. And there's such a downside to this. I mean, they increased interest rates by 0.25% yesterday. Everybody pretty much expected that. But they went on to say, we'll probably maybe increase a couple more times before the end of the year. And there was even the possibility of cutting rates. Now, if you turn back the clock to a year or two ago, when the market was going crazy, the real estate markets were going crazy, the Federal Reserve Board was pumping tons of money into the economy. That's what we're going back to. We're going to reignite this bubble of everything, the everything bubble, bonds, you name it. That could not, all just to make sure that we don't run into a banking crisis. So it's getting really interesting because I do believe that with what the Federal Reserve Board is doing is they're going to have to make a choice what it is they're going to fight. And right now, they're raising interest rates on one hand, which is designed to fight inflation. And on the other hand, they're pumping tons of money into the market again, which is designed to increase inflation. I know if it doesn't make sense, it doesn't even make sense to me sometimes. But that's what they're doing. They're trying to balance things out. They're trying to forego any potential crisis. Well, Moody's, which is a rating, one of the top rating services, had this to say today. They released a statement. Despite quick action by regulators and policymakers, there's a rising risk that banking system stress will spill over into other sectors in the U.S. economy. unleashing greater financial and economic damage than we anticipated. Simply put, the risk is that officials will, in quotes, will be unable to curtail the current turmoil without longer lasting and potentially severe repercussions within and beyond the banking sector. Moody's warning comes just as many investors' worst fears have been allowed for now, and one day after Federal Reserve Chairman Jerome Powell assured Americans that the central bank would use its tools to protect depositors. Beneath the surface, though, is lingering worry. Now, I get it. The problem with the banking crisis, which they act as if we've had a major banking crisis, or we're experiencing a major banking crisis. Now, I'm not downplaying what has happened to the two banks that have gone down. Not downplaying that at all. But this is what the government fears. It's not that this fear is already come to life and is currently waging a war on the economy. And this is what they fear. They fear a bank run where depositors demand their money all at once and the banks cannot oblige. So Treasury Secretary Yellen, we'll build into this. She came out yesterday. Now, we talked about this 2 days ago. Talked about the road show, that you had the White House, which you want very little of that to reassure people, because of you got to be really spot on with messaging. We know that President Biden is not equipped to do that. Then there's a Treasury, the U.S. Treasury. Janet Yellen, the Treasury Secretary, she's been making remarks, and then the Federal Reserve Board made their remarks. We come back to Janet Yellen, and I got to think, yesterday when the market was up, and then all of a sudden it started dropping, and it ended up almost down about a little over 1.5%. I have to believe that some of that was because of the confusing and inconsistent things that she seemed saying. 3 days ago, she says, the Treasury Department, we are studying to see if we can backstop bank deposits without the vote of Congress. Said another way, we are seeing if we can offer 100% FDIC insurance and backstop, which is another word for bailout, depositors. So if the government was going to back up everything, there would be no need for a bank run, is what the thought is. So that's what the Treasury, that was the statement from the Treasury Department, which she approves. Then yesterday, Treasury Secretary Janet Yellen is not considering any plans to guarantee all bank deposits without congressional approval following the collapse of Silicon Valley Bank and Signature Bank. She told this to senators. Now she's saying, hey, wait a minute. We're going to include Congress in this, but we're not even considering this. In response to a direct question about whether the Treasury would circumvent Congress to ensure all deposits, Yellen said, I have not considered or discussed anything having to do with blanket insurance or guarantees of all deposits. Now, ladies and gentlemen, I'm reading from direct quotes no more than 2 or 3 days apart, where, how horrible is our government at trying to build confidence? And this is a confidence thing. This is definitely a confidence thing. So what I thought I would do, and I wrote about this today, I posted on PrudentMoney.com, but what a bank run looks like. Because the only thing that was consistent was that if a banking crisis is a threat, they will bank stop deposits. So in other words, they are considering it. They will do it, and they will wait for Congress to vote on it. So here's what it looks like. Depositors start to withdraw money. Maybe not at an alarming pace, but a concerning one. Then they get to the point to where they have to sell treasury bonds. Now, banks typically have big portfolios of treasury bonds. They're very, very conservative, very safe. The problem comes down to the relationship of bond prices and interest rates. Now, remember what we talk about is that when bond prices go down, when interest rates go up, bond prices go down. When bond prices go up, interest rates go down. So we've spent all this time with interest rates going down, bond prices going up. Banks are buying these bonds at higher prices. Now we're in a situation where those bonds they bought are sitting with pretty severe losses because interest rates have been going up in a big way over the past year and a half to 2 years. And now they had no choice but to sell those bonds. So what happens is they sell the bonds, they lose money, they report that loss because they have to, and then the bank tries to raise money so they don't sell any more of those bonds to lose more money. Social media spreads the panic, and technology is such that if I wanted to move $1 million from my account, hold that thought, the $1 million from my account, that is. 1-877-913-5357. This is Bob Brooks. Stick around. I'll be right back.
The Word for Today is excited to announce the new official online home for the ministry of Pastor Chuck Smith and Kay Smith, pastorchuck.org. At pastorchuck.org, you'll have instant access to thousands of hours of verse-by-verse teaching by Pastor Chuck Smith from Genesis through Revelation, and full access to special messages on subjects such as prophecy and much, much more. Also at pastorchuck.org, a full library of great teachings by Kay Smith, and a section where you can read some of Pastor Chuck's books online, all free of charge. So visit the new official online home of the Word for Today and the ministry of Pastor Chuck and Kay Smith, pastorchuck.org.
Hi, I'm Jan Markell, host of Understanding the Times. We're very excited to be a part of Bible School Radio. I hope you will join me Saturday, 10 a.m., for cutting-edge guests and the latest information to help you discern the truth, even the inconvenient truth. We'll help you understand our times and contend for the faith. That's Understanding the Times, Saturday at 10 a.m., right here on Bible School Radio or anytime at olivetreeviews.org.
On what event does all of history swing like a door on a hinge? That's what we're talking about this week on the Bible Bus. I'm Steve Schwetz, inviting you to join us as we explore 4 proofs of Jesus' resurrection and then discover why this significant event impacts us personally. Hop aboard as together we travel through the Bible.
Listen daily, 6:30 p.m. on Bible School Radio 91.3.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. 1-877-913-5357. So we are in the middle of a bank run, and I got interrupted. That's what happens. So with technology being what it is, and you know, and Chuck Bentley said this perfect yesterday when he was talking about a bank run. This isn't the 1929 when people line up outside the bank and yelling and screaming and demand their money. This is at the comfort of your own home. Hey, I've got $2-3 million in this bank. I'm going to move it. Click a button and it's gone. And it moves. Silicon Valley Bank, when they went under, in one day, investors tried to move $42 billion. The scary thing about that is Who goes to the bank to do that when you can do it online? Now I'm sure that I just got to thinking about there's got to be daily limits and that kind of thing. I don't know exactly how that would work, but the point is, $42 billion, one bank in one day. But the problem that you've got today with a bank run is that it can happen at lightning speed, and social media is the engine that spreads the fire. That's the problem. So we go back to what the government is truly fearing, and that's what it looks like. Now, the opposite of this, when the Fed stops in, when the Fed starts to circumvent this type of a situation from even happening, they start pumping money back into the market again. And that's like throwing fuel on the fire. And we know we've already discussed this, but that is a concern that we go back to that. Don't get me wrong, I'd love to see a bull market start back again as well, but only after we get through a healthy market cycle, because it's just going to end up the same place again, and probably in a worse situation. So the question is, what steps do you take? And I was thinking about this, excuse me, from using an example. Sorry about that. Using an example of a hurricane. Say you live in Florida. A hurricane is heading your way. I mean, everybody can relate to this kind of an idea. You would look for any weaknesses in your property, in your personal possessions, secure them, make sure everything was as protected as possible, and correct it ahead of time. Same thing with your investments. If we've talked about this from time to time, and that is to make sure that you understand the risk that you're taking with your investments. You may be taking a lot of risk, and you may be on board with that, because you may completely disagree with me, and you might see this as a great buying opportunity. Because I'm just giving you my opinions. Who knows how this is all going to turn out? You may be right, and I may be wrong, or whatever. So if you've got high risk, you're fine with high risk. High risk is that's great. But if you're high risk and you don't feel like you want to be high risk, you need to be making some changes to match up your risk level with the way that you feel about investing right now. You also want to see what kind of bank stock exposure you have. Bank of America, which is supposed to be a pretty solid bank, right? One of the biggest banks in the world, is down negative 46% since January of 22. Negative 46%. So you want to check and see, because I would bet that bank stocks, this is not a recommendation to go sell bank stocks, but I would suggest that they would be problematic if we had some kind of a problem. But just know what kind of risk you're taking and adjust accordingly, or don't adjust because you are fine with the risk you're taking. That's the best step that you can take. The problem is that a lot of you gotta be with. Hopefully, you're with a financial advisor that understands that process. And if not, you need to find you somebody that does. If you got any questions, you can always go to prudentmoney.com, go to the Ask Bob section, and send it in. So let's talk a little bit about other types of accounts, and are they covered? Brokerage accounts, are they covered? They're covered by what's called the SIPC, the Securities Investor Protection Corporation, and it's a nonprofit corporation created by an act of Congress to protect the clients of brokerage firms that are forced into bankruptcy. The SIPC includes all brokers and dealers registered under the Securities Exchange Act of 1934, all members of securities exchanges, and most NASD members. They cover up to $500,000 coverage for cash and securities held by the firm. Cash is limited to $250,000. Insurance contracts are covered as well. And incidentally, the regulators are very clear that they don't want this to be a selling benefit or selling point in a presentation of an insurance contract. So I guess as a advisor, you just ignore that it's there. But they do have the Texas Life and Health Guarantee Association in Texas that covers depositors in the event that an insurance company becomes insolvent, which is something that's very rare. They cover up to $300,000 per life in life insurance death benefits, $100,000 per life in insurance cash surrender. I know a lot of people have annuities up to $250,000 per life on individual basis, and they also have some health insurance benefits that they cover as well. So, we talked a little bit about the study, and this is kind of making some of the rounds. I wrote about it today. That would suggest that 186 banks, according to this study, is in the same shape the Silicon Valley Bank is in. Now, if you look at, that means that there is, the assumption is then that, or what the conclusion is, that 186 banks could run into some kind of trouble or are could be prone to, because they have the same risk conditions that Silicon Valley Bank has. There's something like 4,844 banks in the United States, commercial banks. Now, you might think that 184, say all or part of the 186 banks, ran into trouble. And you got 4,800. I'm pretty close. You get the point. It's just for illustration if I'm off a little bit. 4,848, something like that, banks. And I think the conclusion you would come to is, well, Bob, that's a very, very small percentage of the overall banking community that would run into trouble. Could a banking crisis really come out of that? And I would answer that with the California wildfires. Don't believe any. In fact, I'm pretty sure nothing like that's going on right now. But you've seen the footage, the coverage when hundreds upon hundreds of houses would be burnt up, land destroyed, raging wildfires literally over miles upon miles. I can't even count the number of firemen that are out there fighting this fire, trying to get it under control. That fire probably started by the drop of a single match. The wind took it over, and the next thing you know, you have an uncontained wildfire. It's the same thing that could happen with the banking crisis. but the wind is social media. And the fire probably would be something like, just a small number of banks. So we'll keep you posted on this. If you have any questions, just go to the website, www.prudentmoney.com. Send me an email. This is Bob Brooks. You got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.